Hi, everyone. Welcome to Crowd Forecast News, episode number 191 for August 6th, 2018. Today we will be talking about the 254th weekly report from Timing Research. If you haven't seen this yet, you can go to TimingResearch.com and download the full PDF there. We are broadcasting live on YouTube at 1 p.m. Eastern Time, but I'm also posting all the episodes now as audio-only podcasts available on Spotify, iTunes, Stitcher, or wherever you listen to podcasts. So be sure to look that up and subscribe there. I have Rob Hanna back to moderate today, so I'm going to go ahead and turn it over to him.
Thanks, David. Great to be back. I appreciate you asking me back again. We got a few people here today that I've talked to in the past, and we got a new one here as well. So I'd like to first welcome John Hoagland from TopStepTrader.com. And
thank you
welcome,
very much.
John. And
thank you very much. Pleasure.
Glad to have you here. And Anka Metcalf. I think I just saw Neil Batho join us. Is Neil, you there?
Yep, I made it.
Okay, good. Batho join us? Is Neil, you there?
Yep, I made it.
Okay, good. Yeah, and Neil's from TraderReview.net, and then Simon Klein from top of the list on my page here. Tell us a little bit about yourself, your history trading, and a little bit about TopStepTrader.com if you want.
Sure. Thank you very much. Well, hello, everybody. My name is John Hoagland, and I've been with Top Step Trader since about 2011. Before that, I guess I've got really long history. Goes beyond me. My dad was a floor trader at the Board of Trade for 40 years. So, of course, you know, I had to step into that arena as well. I stepped onto the floor of the Mercantile Exchange in 1983, worked my way up. Went over to the Board of Trade, traded grains for a little while, came back to the Merc, traded S&Ps, but I did everything. I went from runner to floor broker. I basically left the floor in 2010, tried to unlearn everything I knew about floor trading and relearn everything about electronic trading, and I've been doing that since about 2011 alongside working with Top Step Trader. Top Step Trader is a company that's we are searching for, evaluating, and funding futures traders and now Forex traders. We can, of course, talk more about that later on if you'd like.
Excellent. Yeah, we'll come back to that near the end of the podcast. That's great. So we got a real pro here that's been in the business a long time. Not that everyone else hasn't been in the business a long time, I think, as well, but. Good to have you. Looking forward to hearing some of your insights as a former floor trader and now an electronic guy. Anka, welcome.
Hi, Rob. Hi, everybody. So happy to be here again.
Want to give yourself a little introduction? Tell us a little bit about Trade Out Loud.
Hey, guys. My name is Anka Metcalf, and I'm the founder of TradeOutLoud.com, which is an education firm specialized in educating individuals how to day trade and swing trade the equities and the futures market, with the emphasis on day trading futures and swing trading stocks. This is what I love doing. And in fact, the first 2 hours of the morning I dedicate to actively day trading futures. I specialize in future indices, and I mostly swing trade commodities. I sometimes like to take trades in gold and oil, but this is as far as I go into commodities trading. And I typically love to swing trade commodities and also swing trade stocks. I run a trading room where the trading room is open every single day from 9 o'clock to 4 p.m. Eastern. And if you wish to find more information about what we do, you can visit our website. It is TradeOutLoud.com, or you could visit us on our our social media on Twitter, and we're pretty easy to find. Twitter.com/TradeOutLoud, and also on YouTube /TradeOutLoud. So I'm really looking forward to see what our next guest have to say about the market today.
Me too. So let's I'll have Neil introduce yourself next. Anka, welcome back. Thanks for the intro. And Neil, thanks for the intro. And Neil, tell us a little about you and Trader Review. I know a little, you can say it better than I can.
All right, sure. Thanks for having me on the show again. So it's already back in 98, 99. I was a broker at a big firm for 1 year out of college. And I thought this is going to be the thing I'm going to do for the next 20, 30 years. And what I found out quickly is that in a brokerage firm, it's all about gathering assets. It's not actually about managing the money. You just kind of shift that away to the fund managers and private money managers. And I got a lot of great free lunches every lunch hour when the mutual fund managers would come in and pitch their product. They after the seminars for you if you pitch their mutual funds. And but the best thing that happened to me was towards the end of my career, if you can call it a career there, for 1 year, was I got invited to do a seminar on point and figure charting with some guys from an office. We had 2 offices in the same city. And that's what I still do today. I use point and figure. It's just a fantastic methodology. I think I'm the only newsletter I've ever seen on the whole internet that actually uses point and figure. And it's tremendous market timing mechanisms, sector timing. And it's a big top-down analysis where you go with the market first, then to the sector, and then to the best stocks in the sector. And so a few years after I quit being a broker, I did some business consulting, and then started up Trader Review, and I've been doing that ever since.
Excellent. Welcome back. Looking forward to hearing more reviews. And lastly, but not least, Simon. Simon Klein from TradeSmart Forex. How you doing, Simon?
Hey, Rob. It's great to be back here again with you. And thanks, David, for hosting this again, for having me here on the show. It's great to be on the show. Try to be on the show at least once a month, so it's great to be here again. There's a little bit about me, so you can read that. CEO and founder of TradeSmart, which is the website's TradesmartForex.com. I've been trading professionally since 2005. Started off at generic trading in Philadelphia. Started my career in 1996 when I graduated from university. I started at Credit Suisse in both London and New York. And I worked both middle office and then moved on to the trading floor. Just a little about TradeSmart and what we're about. We're a trading education business, and we focus on teaching you how to read the market professionally, which is the first step in becoming a professional trader, in my opinion, and how to run a successful trading business, including how to develop your own trading plan and strategies which fit your personality and lifestyle. It's very important to trade something that you believe in, otherwise you won't be able to do it successfully. You'll doubt it, and you won't be able to, to trade it the way it should be traded, with minimum emotional issues. So if you believe in what you're doing and you have a great understanding of the strategy and how to read the market, then you should be able to trade and take losing trades in your stride, knowing that at the end, after a large enough number of trades, if you have a positive expectancy, you'll come out on top. I'll give you an example. Yesterday, I was trading with 2 of my traders, and I was doing one-on-one sessions. And the first 3 trades we took, with both of them were 3 losing trades. We took 20 trades, and at the end of those 20 trades, we were up 20R. And we're risking $1,000, so we're down $3,000 on the first 3 trades. After 20 trades, we're up $20,000. Just to give you an example. And then again, I traded with someone else later on in the day. Same thing. First 3 trades, losers. So they're starting to doubt it. I have no doubt, because I know it works, and I've been trading this strategy for years now, and it has a positive expectancy. So I know even if it goes through drawdowns over the long haul, I'm going to be positive. So that's what we try to pass over to our traders, the confidence to trade, to trade with confidence, so those emotional issues of going through losing trades do not affect you in the same way as they do a novice trader.
Excellent. Thanks, Simon. Lastly, I'm Rob Hanna. I work with InvestQuant.com. I'm a co-founder there, and I started trading in 1997, 98, around that time. And I used to write on an article a couple times a week for TradingMarkets.com back in the early 2000s. 2008, I started a site called Quantifiable Edges, and you can still read Quantifiable Edges today. I still write there. We've got a newsletter and some other services. And then I started a site called Overnight Edges in 2012, which ended up merging with Scott Andrews' Master the Gap site, and that became InvestQuant. So Overnight Edges became part of InvestQuant. Overnight Edges is focused on trading from today's close till tomorrow's open, and we've also developed some swing edges methodologies at InvestQuant, where we've got automated quantitative systems that produce stats that you can look at to establish a market bias and find trade ideas as well. And I write a newsletter there called The Navigator that examines the swing edges data and looks for trade ideas based on that data. And I mentioned to John earlier today, I normally dress better, and that's really all I want to know right now, and then we'll get in and talk about details. So let's just, or I can start, and then I'll go down the list. I have a very small bullish bias. So John, which way are you looking this week, up or down?
I'm looking higher.
Okay, 2 higher. Anka, what about you?
Higher. Sorry about my voice. Higher.
That's all right. It's higher.
No, I've had a really bad cold, and I still have to. I can barely speak.
Okay. Neil, what about you? You higher or lower?
Yeah, also up for the week.
Oh no! Come on, Simon. You saying lower?
No, I'm going to say higher as well.
Okay.
I've got my screen up here. So basically, let's go from the top down. Technical trader. So we can see if we look at the monthly chart, we're in an uptrend, and we're pointing to the upside and highly likely to break to new highs. Right? On the weekly chart, we're uptrending as well. But the only problem we have, if we look left, is this area where we drop down from. So we really need to clear this, obviously, to move higher, but we're in an uptrend. Yeah. So
yeah, and you're pointing late January, early February there.
Yeah. So kind of bounce back and kind of edging up again is pretty positive. I mean, we've got levels of demand beneath us now that if we do drop down, they may kind of push us higher. So you can see like around this level, we're on top of this big drop. Yeah, we tried again, and we can see that it's weaker now, and now we're on top of it. Tries to go down here, and now we go up. So it's looking more likely to go higher. Now, that being said, still a possibility we could have another move to the downside again, and this could end up being the top, and we could have a big move down. There's another possibility. If we don't, all I can say is this: if we don't break to new highs, and the other thing is, and we don't base sideways, then likely we're going down. But that being said,
that's the only other option, isn't it?
That's the only other option, yeah.
Right.
But how do you recognize it? That's the question. How do you recognize it? At the moment, the odds are up. Yeah. Yeah. And if we get to the top and start basing sideways, the odds are higher still. Yeah. The only other option, if it doesn't do that, if it doesn't break and we get the move down again, then it's, and it fails to make a new high here. And we won't know that until potentially the end of the month, or potentially the end of next month, the end of August or September. Yep. If this turns around and we end up putting in a kind of roughly equal high or lower high, then that could be the top, and we could get moves down below this level and come back all the way. But at the moment, you can only go with what the market's doing now. So the odds are higher now, because we're at the extreme of this supply level.
Okay, so you're seeing the momentum is positive, and we've got the kind of a series of higher highs and higher lows over the last couple of months here.
Correct. We can see this level here. This is the level that we have to really go above, and we're kind of knocking against this level for the second time. But again, it's it pushed us down, but at the moment the momentum and everything's to the upside. Okay. But just bear in mind, we still, this is not the greatest place to go on the long side. Yeah, because down here, yes. Down here, but up here, probably not the best place to initiate a long position, because there's a possibility that we're going to drop down again.
Is it also, are you considering overbought for a short-term trade, is what you're saying?
It's just a supply level.
Okay. Because you're bumping up, you're getting near that upper boundary.
you're getting the level where we dropped down before, so there's probably some orders sitting around that level to take profits, and if there's an overwhelming number of sell orders sitting there, there'll be more supply than demand, and we're going to drop down again. If
Okay.
people
So
aren't
more
willing
inclined to buy into a pullback.
Yeah.
Okay. All right, great. That all makes sense. Neil, can I move on to you? Or what is it you're seeing that was making you believe we might be continuing higher this week as well?
Yeah, my chart's similar to Simon's, but I just wanted to share something on it. Okay, it came up now?
Yep.
Okay, so the chart is pretty much exactly the same, but if I look over here at this old high, I use an RSI rating, as RSI rating was way up at 84 when it reached this peak here, but now we're not even at 70. So if I was to look at just the RSI rating, I think that could go up to about 80, which I think could push us to new highs. And I think that the fear of missing out is going to be a lot greater than staying out of the market at this point. So I think that point.
What's the RSI you're using there? Is that a 14 period or a 10 period or?
Yeah, the 14 period.
Okay.
Yeah. So I mean, another thing too, if I look over here, so I use the Ichimoku Klein, and you can see that going all the way back to September 2017. So this was the election, and then you get this trend up here. It pretty much keeps pace with the cloud and stays about the same distance away. You can see here with the mouse. And then what you get is, I've seen this time, I actually remember this back in '99 when Harry Dent said he found a new Dow channel, and it looked exactly the same, and it just starts taking off into the stratosphere like this. That never, ever, ever stays long term. And back in '98, '99, maybe you remember this, Rob, when Harry Dent was, the big guy everyone was following, and he predicted Dow 42,000. And I think he's going to be about 30 years too late. But if I look back,
there a book?
If I look back,
there a book that was?
He actually did write a book, something like that. Yeah, Dow 40,000, wasn't it?
Yeah, something like that.
Yeah, but he nailed it in the early '90s when he said Dow 10,000. Everybody laughed, but I mean, a stop clock is also correct twice a day, so you never know, right?
Yep.
So yeah, I think we can actually blast through here, and I think tomorrow we're going to get a gap up. So I think it'd be a good idea to get in today.
Okay. All right. So you're looking at this momentum continuing. So far it looks pretty strong. We've had this is the third day where we've got some good momentum after the gap down. What was it, on Thursday?
And we've been waiting all year for this to happen. I mean, this is going all the way back to February. We barely got past the February, March highs here. Yep. So I mean, that's not. I mean, looking at this sell-off, the whole year is basically a wash.
Right.
So you got a pro-business president, and I think we're going to blast through.
Okay. Yeah, and you're okay. Yeah, and you're anticipating the RSI readings will jump up there, so you don't have the negative divergence. Is that what you were looking at there?
Well, I'm just saying, if it could do that before, and we're looking at passing this old high. If I'm looking at the reading only, that was very, very extended.
Yeah.
Beforehand, and now we're not as extended. If I look over here on the RSI, so if I'm thinking, where are we? Could there be an imminent pullback? So, for example, if I'm looking at this chart here, if there was a similar chart where we were now and we're way up in the 80s on the daily, I would think, yeah, you gotta be really careful. But we're at, I think, about 64, 65 here. So
okay. So you're not looking at that as a negative right now. You're looking at that as, we can still accelerate more and not be too overbought.
Exactly. Yeah. I wouldn't use RSI for necessarily getting out unless you do it on the weekly and it's incredibly high on the weekly for several weeks. You know that a drop is almost imminent.
Okay.
So maybe let's look up a weekly here just to show that, yeah, if you go back in time, the RSI almost never gets above 70 on the weekly. So you can look at the pink below here. It almost never gets up there. It can go for years and never get there. But then all of a sudden, if you look here, and this is just extraordinary to go for, I think it's about 3-4 months or so, and to have a reading 90 on the weekly RSI. I mean, I don't know if that's ever happened in 20 years. I'd have to go all the way back, scrolling way back on my chart to ever see that.
Yeah, as far back as your chart's going, nothing's coming close to that.
I mean, yeah, 2004, we're at 76. I mean, it's just, you can't even find it. So if you see something that extraordinary, you know, and that new channel that sort of all of a sudden ramps up like an exponential equation, you know, something bad's going to happen. But if I look here on the weekly, I mean, we could go for maybe another 2 weeks.
Yep.
Rallying maybe up to about 3,000 on the S&P. That's not that far away. Traders on the floors are going to start wearing those baseball caps that have, you know, it's not as exciting as Dow 20,000 though, is it? That's a cool S&P 3,000. You're walking around, you feel like an idiot. You get a couple of traders will go, "Oh, cool hat, man," but everyone else is gonna. So maybe they won't wear the hats, but it's got to get there.
S&P 2,900 hats.
Yeah.
All right. Yeah. Thank you, Neil. So let me move on to Anka here. Anka, so we got Simon looking at the momentum and the support underneath as positives. We got Neil also seeing some strong momentum. Is there something that what is it you're seeing? Is it similar, or are there other things that you're looking at?
Yeah, I see it as a strong momentum and a continuation higher. We have been trading into this continuation pattern since we broke and I think this was a critical level at the 2830 zone from this gap up in the SPX, and this dated on July 24th. So we had a pretty indecision move right here, and then we blasted higher. We blasted into a continuation, which was also an extension level, and then we had that really kind of scary pullback. I'm a day trader and the swing trader, like I said. But when I was day trading, these moves came in super violent. So it was crashing to the downside and then reversal and then back down. And believe it or not, I was looking bearish. If the price was not trading above 2830 zone, I would have been really, really bearish at this point for a continuation below 2800. 2800 seems to be that line in the sand that's still holding price at this point. So we have been meandering around this price, 20 points to the up, 15 to 20 points to the upside and down. We have been gravitating around this area, and we're going to pull very quickly the weekly chart. And this has been the critical area for this prior pivot high back in March. So going back to current charting, as long as we're still trading into a continuation and we've triggered continuation after continuation. And once again, today, what is very interesting, because I love to monitor these weekly charts right here. Now we can't see because I have these fibs drawn out, but we have triggered a continuation onto the monthly chart that may project the price higher back into the prior high, which was the 28.72 actually. So my reasoning, I'm a very technical trader. I do what the market is telling me. I don't have a lot of interpretation for charts, but as long as the current support level into the 48 is going to hold, we may still have a fluent continuation higher into the 2860, and that is my next target area for the SPX. And same for the S&P 500 index futures. In fact, today was one of the most robust trades that it has grinded higher. It was literally inching higher. It had the really nicest pattern from the intraday trading for the intraday trading aspect. Russell was all over the place. Russell had that relative weakness. It continued to lag a little bit. It still needs to trade above that 1690, but it's still grinding there. And this is what I see. So I see the S&P higher going into the 60s. Projections for higher, obviously, I'm going to just pull the weekly charts just a little. Obviously, continuation into the 2872. We may continue even above that area all the way into the 2930s. So this is my short and medium term target for the SPX. And definitely, if we look at the overall markets, and I've said this, I think, into a prior show that I've been invited, as scary as this volatility was when it came in back in February, it was nothing but a pullback into a support level, which was the 29.30, and also a revisit into the 50 SMA. And again, as scary as it was, this was just a pullback and a reversal back to the upside. So I still think that we have still a lot of momentum for a continuation higher. If it was, and again, I had some challenges last week, because last week, for the first time in a very long time, I was a little bit bearish, and that it was because of Russell alone. But if we look at one index, the SPX, S&P 500 index, we're definitely heading higher as the charts are projecting.
Okay. All right. Great. So far we got everybody pretty much on the same page here. And I know, John, you indicated you were bullish. You want to tell us a little bit about why you're looking to the upside? Is it similar reasons, or do we have other stuff going on that's leading you to believe we'll get some more of a rally this week?
Well, everyone was so thorough in their analysis, and I'm not quite sure if there's anything left to say, but I'm going to just do a little thing here, and you can see my screen, right?
Yep.
Just a very simple daily chart here. We have this 2791 level that I put out a couple of weeks ago, even 3 weeks ago, as a kind of a go no go level. And last week we traded right to it in the extended trading hours in the overnight session, and we didn't even get a chance to look at it in the day time frame. So that to me was a sign. Okay, we did take a look at that level in the overnight. We didn't take a look at it in the regular day, the regular trading session hours. And then, of course, we drove higher. I'm a day trader. I don't really hold futures positions for longer than, one given day. It's got to really be something for me to hold something beyond that. So the fact that we tested down to this is, again, my no level. This is an important longer time frame inflection level for me. And basically driving right to this area here. Okay, this is where we kind of broke off. I think Anka mentioned the really scary break to the downside, which I think really tends to put day traders and swing traders into FOMO, basically, because nobody wants to miss the big move lower. After being in the S&Ps for as long as I was, the S&Ps have been eating shorts for 40 years. They just seem to get shorter time frame discretionary traders shorten the hole every time, and then they keep moving it higher on them. As far as the expectation to the upside, my initial expectation is this is a level. It's basically the high lows from our highs up here. So very simple, very visual, very easy to see. My question is, once we get through there, where do we go? I think everybody's pretty much resigned to the fact, okay, we all think that this market's is poised to maybe even accelerate to the upside. So I like to use measured moves in that regard. So I got another chart right here, and I basically have a fib extension from this swing low to this swing high, back to this swing low. Look where it's got us today. It's basically the 38.2 is pretty close to our current high. The weekly kickoff, or the level that I know that I pointed out on the other chart, is very close to the 618 on this fib extension. But I think it's entirely possible for this market to resolve this particular drive to the upside up around 2947, 2950, up in that area. Just through measured moves. I think, we all know how visual markets are. And so if that adds anything to what everybody else has said, I'm glad for that. Quite simply, I think it's poised to continue.
All right, great. And I'll just throw in my 2 cents here. Some of the things I'm looking at InvestiQuant, as I mentioned, we publish odds based on the systems we look at. So we've got three different kinds of systems, or three different ensembles. We look at it, we call them. One are acceleration based, momentum based, and then the third one is seasonality based. And while the 1 day and 3 day breakdowns are somewhat neutral right now, the 5 days actually looking pretty good. So when we're looking out from Monday to Friday, that's kind of what you want to look at is the 5 day. I like to have them confirming the three different time frames, and I'm not seeing a lot of confirmation, so that's making me a little hesitant. But the 5 day is looking strong right now. They're showing a winning percentage historically based on the current setups of 63, 64, and 65%. Looking at our acceleration, momentum, seasonality systems, profit factors are between 1.38 and 2.01. Profit factor for those that aren't system traders just compares, your gross gains versus your gross losses. So a profit factor of 2 means that if you traded based on this setup over and over again, your gross gains would have been about twice your gross losses. Obviously, the higher the number, the better. Normally, around 1.3 is a number that I look at as having a pretty good edge. So we're well above that with the 5 day. So that's one positive for the 5 day. Another somewhat positive right now is I do a lot of Fed-based research, and this week that we're in now that ends on Wednesday, the Fed has a Wednesday to Wednesday reporting period. The week we're in now, QT, which stands for quantitative tightening, is supposed to be very light. In fact, the Fed's SOMA account, or it stands for SOMA stands for System Open Market Account. It's where they take all of their bond purchases and hold them. And right now, the Fed is in a quantitative tightening policy where effectively what they're doing is they're not, once bonds mature, they're not renewing all of them. Previously, they had been renewing everything until last October, and now they're renewing less and less. So right now, it's about $40 billion a month that they're not renewing. But it's not smooth over. Over the course of the month. And this particular week that we're in right now, we shouldn't see a sizable decline in the SOMA. In fact, I'm anticipating it comes in flat, and it could actually rise a little bit this week based on my analysis of past months. Next week, we should see a sizable decline. There's a lot of treasuries that are going to be maturing on Wednesday the 15th. So that we could see a bit of a pullback there. And I do believe with all of the quantitative tightening we have going on right now and some of the negative seasonality based on just we're in the worst 6 months. Summer can be rough sometimes. We're also in a negative presidential cycle right now until November. We'll come out of that at that point. There's a lot of negative seasonality. Liquidity is tight during the summer with low volume typically. August has been bad in recent years, and now you've got even tighter liquidity due to the Fed. So I like this week, but I think we could be in for some shocks at some point during August and September. I'm not anticipating that we're just going to continue to be able to ride the momentum. I think there's going to be some kind of liquidity crisis at some point, and whatever the news is that sparks that. It could be brief. It could last a few weeks, but I think we're going to be seeing some sizable pullbacks at some point. So I'll be looking to play it cautiously during this time, and if we get these big pullbacks, I'll be looking to take advantage of those.
Hey, Rob, when you say that the Fed isn't buying bonds anymore, does that mean the government's not issuing them, or other people are buying them, or someone else's bonds? Because before, the Fed was just printing money and buying the bonds, right? Yeah, so the Fed was going into the open market, the auctions, and buying those. And so they've stopped doing that. But what they've done is they've got a huge portfolio,
And so a couple weeks ago, there was, I think it was close to 28 billion that expired. And a year ago, they would have just taken the maturity and reinvested it and bought another 28 billion in treasuries. Now they let 24 billion of it mature without renewing it, and they bought the other 4. Next week, I think it's somewhere, I can't remember, it's 23 billion or something, so they'll probably not renew 12 of it. And that just takes liquidity out of the general system is what ends up happening.
So is this going to be good for the dollar? Because the dollar looks like it's about to break out. Because wouldn't that mean a decrease in the growth rate of the money supply? Because the Fed creates money out of nothing to buy the bonds. Money doesn't already exist, so they've been increasing the money supply. And now the money supply would not be growing as fast, at least as far as the Fed goes.
You could be right on that. I haven't looked at the impact on the dollar, but what you're saying sounds reasonable to me. I haven't looked at the impact on the dollar. I've done and written a white paper on the impact of the SOMA flows with regards to the stock market. So I can't really speak on the dollar.
Well, I look forward to your new report then, Rob.
You can find it at Quantifiable Edges. You can download it for free. So we'll see. But I expect at some point it's going to come to roost, and the Fed always changes their policies too. So when bad things really do start happening, if they're really bad, they change it up, and then they start. They go from hawkish to dovish to hawkish to dovish, right? All right, let's get into the questions of the week, and I'll let you guys quickly, if you have anything else you want to add about that you're looking at potential either fundamental or news or anything else this week that you're anticipating could do something to impact your market bias. Let me ask you if you got anything there that you want to look at beyond the technicals that we already spoke about. John, is there anything that you want to bring up that you think is important that would get you more bullish or turn you bearish?
Well, with the amount of news that the stock market has already withstood this year, I think it's actually held up really well.
Yeah.
In my opinion. So, barring anything, big, I don't know, catastrophic, but markets are people, and marginal. It's people that are irrational. So if something scares investors enough, they may get that ball rolling in the opposite direction. What that might be, I don't know, because it seems to me the news is already out there, and markets, they have a pretty short memory, especially the S&Ps. So anything in particular that concerns me, well, everything, but I just have to be able to respond as it happens if that does. Am I expecting something to come out this week to derail this? Not necessarily, but it's not going to happen. It can happen anytime. So anything in particular? No. Just keep your eyes and ears open.
Yeah. Always need to be able to change your mind, right? If you can, you're going to end up married to a position that's going to go against you a little too far.
Yeah, we don't change our mind. We change our career.
That's right. That's a good one. I haven't heard that before. All right, Anka, anything that's on your radar for this week that might get you to?
No, we have a pretty quiet economic calendar this week.
Yeah.
That, from the economic front, not unless we see some tweeting, I don't think that we should, pay attention to anything in particular. I think, and even if we're watching news or whatever, any kind of economic release, Being a technical trader, I'm just watching the market. I'm just watching, what price does, how it reacts. Basically, it's a support resistance game as of right now. And, the presence of so many algorithms pretty much makes the market a little bit more predictable, especially when you're going for smaller, when you're navigating into smaller time frames, such as day trading. It's a matter of surviving the whip more than anything in the market, because you don't know when somebody's gonna come on TV or somebody's gonna like tweet something about the market, and the market is gonna have like that sharp whip, either the upside or the downside. But nothing in particular for this week. We're just gonna continue with earnings, and that's pretty much it. We're pretty much gonna see, and what I think is that for the month of August, we're pretty much going to see a little bit lower volume, and probably the movement, because I trade the futures market, day trade the futures market. Probably the best thing would do to focus, the trading for the first 3 hours in the morning, and then pretty much, done for the day. But if the trading opportunity is there, and if there is a pattern continuation, and if there's not a lot of chop involved, if support resistance levels will be respected, yeah, I'll be looking to trade this the afternoon as well. But again, it might be a little bit choppy for the entire month of August and into September as well, as we're heading, earnings season is going to be easing down in September. So we're going to probably see some slowing down in the market as well, as we're going to be heading towards the fourth quarter.
Yeah, you get into these low volume dog days of August here.
Mm-hmm.
Not a lot of afternoons, a lot, like you mentioned. Neil, anything in particular that you want to point out? That you're worried about for this week, or beyond just the the technical stuff we already talked about, I guess.
Hey, Neil, you're muted.
All right, let me ask Simon quick. Anything you want to point out for this week? Anka mentioned it was a light week from an economic standpoint. I don't know if there was any other news that was on your radar.
I started out as a kind of part fundamental, part technical trader. I moved over to completely technical. Like, the news doesn't interest me at all.
Okay.
And
that
starts telling me everything I need to know. I don't need to know what the news is. Or
yeah,
even it's actually even, I'll take that a step further. It can actually be detrimental to your trading as well, because
take the trades, right?
Well, but I used to spend 3 hours a day analyzing news and stuff before the U.S. market opened. We used to be in the office at 6:30 in the morning, like earlier sometimes, and we used to spend time going through this. I was an equity trader at the beginning, and we used to spend time going through, what's on the radar basically for the day, what news. We used to look at balance sheets and different stocks, and then come up with like a watch list, and then, and I found over the years that, good news would sometimes the stock would go down, bad news sometimes it would go up, and then sometimes it would go down. And I didn't find anything that would give me an edge. I paid for a service we did as an office. Actually, we used to get the news like a few minutes before everyone else, but again, that really didn't give me anything. It wasn't we used to get the news before, and like, so what? So it was great news, and we knew it before, and then the market went down. So you're going to get in before everyone else, yeah.
Right.
Get a higher price before it goes down, yeah.
Right. Tough to interpret. It's not always the news that matters. It's people's reaction to the news.
So it's the reaction to the news, and everything, everything you can see if you understand how to read the markets, how to read the candlesticks, how to read what's happening as it's happening. And not project your views on the market. Just be open and let the market speak to you, and then do what it's telling you to do. Once you know how to interpret that, that's my approach.
Okay. All right. And then let me just roll right in. We got to keep the answers short, because we are getting a little late on time. But what advice? This is question number 4 on this week's survey. Give and/or what resources would you recommend to someone who's new to trading? And I'll start with you, Simon. I already had you on the line there.
Okay, so first things first, if you're going to become a technical trader, if you're going to, I mean, you need to know a bit about chart reading. The first thing I would do as a beginning trader when you're starting out, learn how to read the charts. Learn how to read the candlestick charts, understand what they mean. Now, again, there's a lot of information out there. Forget indicators, just learn to read price action, learn to read the raw price charts, what they represent. Learn how to identify supply and demand in the market. Learn how to identify trend. Again, there's a lot of misinformation out there on that.
Is there particular resource that you'd recommend as far as learning chart reading? You know, I learned to read charts 20 years ago. I have no idea where I would start to learn to read them anymore. Right?
I have a training which I invite anyone to do. It's called How to Read the Market Professionally. You can get it from my website. It's on the front page actually, and it takes you through everything you need to know about reading the charts. You don't need anything else beyond that. That's basically pure price action. And that means if anyone doesn't know what price action is, that's basically the charts without indicators, just plain, you know, or naked charts, if you want to call it that. No indicators. And that was one of my turning points when I kind of threw all the indicators out, and it's like, wow, this feels like kind of light. And you want to basically, you know, like have the least information to process in order to make decisions as possible. So you don't want to have so many indicators. And I remember at the beginning, I was walking around like the trading floor and looking at other people's, you know, other traders and how they were doing it. And sometimes you could barely see the candlestick charts. There were so many indicators, and you know, there's discussion amongst traders of, you know, which indicators, and these three say buy, those two say sell, and what do I do? So I'm like, okay, forget all that. Let's just look at the charts, what they're telling me to do, and go with that. Let the market decide. And this is a very, very important thing. I know this session that we do here in the Timing Research Show is all about like what we think the market's going to do. And do you know what the big eye opener is for most beginning traders? And again, this sounds very counterintuitive to what you might think. I'm going to make this statement. You do not need to know what the market is going to do to make consistent money in the market. You don't. So if you, and that's maybe the biggest advice I will give to anyone starting out. You don't need to know that. You need to know what the probabilities are based on what's happening now, and then play those probabilities. You don't know no one knows what's going to happen. You know what's likely to happen, what the probabilities are of certain scenarios, and then you play them. Say, for example, a certain scenario is 70% likely to play out to the upside, and you are kind of looking for a reward to risk of 2 to 1. Now, you're going to play that. You're going to be wrong 3 out of 10 times, but you're going to make money big time doing that, you know, with the 2 to 1 and the 70% batting average.
Right.
So it doesn't matter what this particular trade does and whether you're right or wrong on that trade. It matters how you look. And this is, I'll leave you this other thought as well. So that's the thought. You don't need to know what the market is going to do to make consistent profits in the market. And there's 2 things that all beginning traders think about is, you know, making money and being right. And again, trading is not about being right or wrong. It's about making money. But don't think about that when you're trading. Don't think about money when you're trading. It's the worst thing you can do, because it's going to take you out of balance, out of equilibrium where you need to be in order to take the information in and make the correct decision. So it's not
I hear
trading.
what you're saying. Yeah. You know, you got an edge you want to be in. If you don't have an edge, get out.
Yeah, and it doesn't matter if this trade works or not. So it's not a life and death situation. I remember most beginning traders think every trade is a life and death, you know, and they sit there watching the screen, every single tick or movement. It's pain or pleasure, and it shouldn't be like that. If you are trading like that, then stop, take a step back, and learn how to do it the correct way.
Okay. All right. Thank you, Simon. I need to move on. We got to get through this kind of quick here because we're running low on time. Neil, what about you? Is there quick piece of advice, or what resources would you recommend to someone who's new to trading?
I think if they're absolutely brand new, just get online, find some good websites, learn the basics of candlestick charting. You know, I actually learned point and figure first, and I used that for years before I even picked up candlesticks. Now I use them both at the same time, candlesticks and clouds, and I had phenomenal results only ever using point and figure. I didn't know what a hammer candle was, shooting star. I didn't know what any of that stuff was. and I made some brilliant calls using point and figure. So, and I still do. So I think whatever methodology you use, you just got to become an expert at it. And
yeah, you don't need to know everything. You just need something that's going to give you an edge, whether it's candlestick or point and figure or whatever. Yep.
Yeah, I didn't know RSI. I mean, just did strict point and figure, and it worked out totally fine. So yeah, that's yeah,
I like that. That's good. You keep it simple for the if you're a beginner trader, and just find something that works for you and gives you an edge, right?
Yeah, but I can pick up some small things later for. I mean, I use candles in the cloud more for fine tuning the entry points and exit points at this point, but I still use point and figure as my main mode.
Yep. Well said. Anka, what about you? Is there a piece of advice that you would give or resources you recommend?
Well, there's this one little thing. So I think that Simon touched pretty much everything that I wanted to say. And one little aspect, and again, the RSI discussion and the candlesticks, so important. And it is so important to watch not only the formation of the pattern, but the reaction afterwards, because that is, us traders, we do have the visual memory. So what try to memorize winning charts, because obviously you're going to be remembering the winning trades if you apply a thorough analysis after you are done trading. So one there that I would like to add here, number one, is trade into a simulated account for at least 60 days. And I think it's very important to pin down your strategy, double test your strategy in real time. Don't back test, just do it live as the market is trading. Open that simulated account. Do not get very comfortable in the simulated account, and try to trade the simulated account as if it is your real account, mimicking the exact amount of money that you are going to throw into your brokerage account. Don't start trading with 20 contracts or 50 contracts. As awesome as it would be to see those thousands and thousands of dollars flying into your account, it's not going to help you one bit. Try to keep it extremely realistic. And then don't get very comfortable, because when you're trading with real money, there are going to be a lot of emotions involved. We cannot eliminate emotions because we're trading with money, and money is the most precious commodity. The other thing is to keep a journal, and I think that this is going to be number one on every. I have been trading for so many years, more than 20 years, and I still keep a trading journal. And I document my trades, not only with the entry points and exit points, but with explicit explanation at the end of the trade. Why did it work? Why didn't it work? So you need to have a reason why that happened in the market. Why did you stop out? So for instance, today I did have a trade where I had two trades at the same time, and I didn't really feel comfortable in one of the trades. So as soon as it triggered and it moved a little bit higher, I moved my stop a little higher. But looking back at the trade and analyzing the trade after I exited the trade, I realized that, you know what, that was a mistake. I shouldn't have done that. I was not comfortable with the risk. I had a little bit more position size than I wanted to, and I wanted to take the pressure off, but you do not have to do that. Take the entire pressure off, just sell half and then leave the rest in. So as you're trading, even at 15 years or 20 years, you're still gonna go to that journaling, and you're gonna see, okay, this is what I'm doing right, this is what I'm doing wrong. At the end of the month, look through your journal, and in fact, you're going to be able to see, and you learn from your own mistakes. You're going to be your best mentor ever, and it's like self analysis. It's going to be self-analysis. It's going to be the best for your trading.
Okay, great, Anka. Thank you. Like that advice. I think journal is important, especially for beginning traders. So, good stuff. John, how about you? Is there advice you'd like to give, or what resources you'd recommend to someone who's new to trading?
Well, I think that all the advice everybody's given so far has been excellent. It's all things that I talk to traders about, and I talk to a lot of traders here at Top Step Trader. The simplicity of the charts, yes, very important. Trade small, yes. You don't need to be trading big until you can trade small. The journal, also extremely important. I usually like to add some degree of changes, during the trade, whether it's emotional, physical, mental, whatever those changes are. I think that there's things to learn from that. Again, somebody coming into this brand new, I tell them, these are basically auctions. Price is going to go higher until it's viewed too expensive. Buyers will back off, sellers will come in, and vice versa. A lot of people ask me, how do I make $1,000 a day trading futures? I tell them, start by making $100 a day. I think that the realistic expectation is extremely important, and the self-knowledge. How am I going to be able to respond to really tough decisions that are consistently in my best interest? So, educate yourself on the tools, candlestick, whatever it is that seems to speak to you. I usually like to say, if you're on a simulator, play a little bit. If you're going to be an athlete, you may not know whether you want to be a football player, baseball player, hockey player until you actually play it. So if it's going to be, crude, S&Ps, whatever kind of market kind of speaks to you, then, I think it was Neil who said, or Simon that said, become an expert in it. Take the time, and, don't risk capital until you find some way to find some consistency. And, I like what Anka was saying about don't stay in sim too long and treat it like it's real. If you can treat it like it's real, you're going to get a much better feel of when it is real. And, you come to Top Step Trader, get through the combine. You don't even have to risk your own capital. We'll put it up for you.
All right. And so speaking of that, let's wrap it up here. I'll give my resources and or small piece of advice at the end. But John, if you're going on at Top Step Trader right now that you want us to know that you want everybody to know about, please let us know that. And if you have a trade idea for the week, we welcome that as well.
All right. Well, at Top Step Trader, we are consistently looking for traders who can profit consistently. We have an evaluation process. There are some specific rules, risk rules. If you can get through and succeed in the combine, step 1, step 2, you'll be getting a funded account. As far as trade of the week, man, that's looking pretty far out. I think we may already be in one. In the S&Ps, I'm kind of liking the action so far today, and that may be my trade of the week. Not quite sure.
All right. Anka, let me go to you quickly. Anything going on at Trade Out Loud that we should know about? And do you have a trade idea that you'd like to share for the week?
Sure. You guys can also you can always visit us on YouTube. I do post a free market outlook of futures indices outlook and a futures market outlook on every Sunday. It is free. Go to our YouTube channel. It is youtube.com/tradeoutloud. We actually talked about this possible with the upside in the indices. Also, you can subscribe to our trading room. We have a trading room that is focused on day trading futures and swing trading stuff. Also, swing trading futures as well and commodities. Feel free to give us a try. Visit our website for more information under the trading room tab. We do have a transparent portfolio. You're going to find all our trades there, the good, the bad, the ugly, everything that everything is in there. Also, as a trade of the week, I do have one small trade. Obviously, there is one that has already triggered. And also, all my trading ideas you're going to find on Twitter. Most of my trading ideas, 70% of my trading ideas are going to be posted on Twitter. But I did like CLM today, and as a breakout, and that is a swing trade. And that is CLF. All right. I'm going to try to post the chart here. All right. The area that I'm watching is over $11. My platform is a little slow today. All right. The area for entry is $11 and the stop is under $10. And I'm looking for a continuation breakout into the $12 and $13 and potentially a little bit higher. For those of you guys that are day traders right now, just a heads up, we're getting those 5-minute reversals. We may be getting a 5-minute reversal, so 5-minute charts are going to be on watch. And E-mini Dow, S&P 500, and NASDAQ as well. Russell reacting as well was a little bit sluggish, but just a heads up, guys, we're trying to push towards a 5-minute reversal here in the markets. We're tapping onto very strong areas of support. So just a heads up on that. I will be trading that. Thank you so much for having me on the show.
Thanks, Anka. Neil, what about you? Anything good to be aware about? And if you have a trade idea for the week, that'd be great.
Hey, Neil, you're muted again.
Here it comes. Oh, Neil. All right, I'm going to come back to Neil right after Simon then. Simon, trade smart Forex. Sorry about that.
Okay, so if you want, you can go to my website, TradeSmart, and if you want to learn in 15 minutes what you need to do to build a profitable trading strategy, and put your email in over here and your name, and you can get access to that. We have a live trading room. We run Monday to Thursday. We also run on Sunday to Thursday, and usually an hour a day. And so far, we're kind of making around 7% a month. And all those trades are recorded and posted and everything else like that. If you want to learn, if you want to watch a previous webinar we did on August the 3rd about how we analyze the markets and understand a little bit about supply, and then you can still access that. Trade idea. I'm looking at this as a kind of long-term kind of swing trade. I'm already this trade from around this area on the short side, looking for this to go down to like 120 as 0 yen, potential short trade. Now, if the dollar keeps going up, it's going to push the euro down. And if we have a potential move up from this area on the yen, and then again, everything's kind of in the right place for this trade potentially work. And again, it's around 1,000 pip move, 1,000 points, depending how you look at it. And that's a potential trade that I'm in already, and you can potentially get in. It's in 1,000 pips, you're going to get potential pullback that you can get into the trade or add to the trade if you're already in it. So that's the idea. Thank you. And thanks again for being on the show. Thank you. And thanks again for being on the show. It was great.
Great. Thanks, Simon. Good getting to talk to you again. Neil, if you want to give us an update at trader review and a possible trade idea, that'd be great.
Yeah, sure. I'm just looking here at S&P 500. If it closes down a bit today, what I would do is just trade the breakout tomorrow and then look for to lock in some profits. Or maybe you could even get out here and then buy again right on another breakout. And if the second breakout happens, you're only going to be missing a tiny bit profits unless something happens overnight.
Okay, interesting approach.
Yeah, I've actually looked way parts have slowed them down tremendously. And even on a stock, if you always buy the breakouts, yeah, you can do tremendously well, even sometimes better than holding long term, because the stock will sell off quite far and then break out off the bottom. So I'm not a big breakout guy all the time. For example, I look back here, this would be a good time to buy here on a pullback because it's already in a positive trend. You know, that's really one ways to go. But if it's a very obvious breakout, then that's something that you can definitely do. Like tomorrow, for example, we're almost near the close today in a couple hours. And the only risk in that approach, of course, is there's going to be a gap up tomorrow, and I think there's going to be a gap up tomorrow. So yeah, if you want to go to TraderReview.net, I give away a lot of good analysis every week, basically overall broad analysis where I think the market's going to go, and specifically on sectors too. And if you want to join my service, it's only $29 the first month, and you get a link in the newsletters as well. And a lot of people actually write me and they say sometimes they just keep reading the free newsletter because they profit enough off of that. So, and I think to myself, I give away too much stuff. I got to tone it down a little bit. But yeah, if you want to go to TraderReview.net, I can start sending you reports.
Okay, great. And great getting to talk to you again, Neil. To just wrap up here for me, as far as resources and advice, the advice I would give people is to just know your edge, quantify your edge, and you can, if you can learn to program and backtest a little bit, that always helps. But even you don't need necessarily to back test to quantify your edge. Just keep track of your trades, understand how much you're making and losing on the different types of approaches you're taking, and that'll help you to quantify it over time as well. Trade ideas. I'm not going to offer one this week, unfortunately. As I mentioned, I'm slightly bullish, but we're fairly overbought. So I'm not looking to buy anything at this point. I'd be waiting for a little bit of a pullback. And overall, as I said, I'm a little bit wary of jumping in too soon over the next few weeks. So I'm going to be looking for some deep pullbacks if I'm going to be buying pullbacks, or I'll be looking for some evidence to short on. And I haven't seen anything from a technical standpoint that's suggesting, hey, now's a great time to short. And I probably won't, as long as we get this momentum moving higher. Feel free to check out my work at quantifiableedges.com. I mentioned there's a free Fed report there. You can download that under the free research area. At investaquant.com, you can take a free trial of the Navigator, which is the letter I write there. And you can contact me at rob@investaquant.com or support@quantifiableedges.com anytime if you got questions on my stuff. Thank you again for having me, David. Sorry we went a little bit over today, but it's an interesting market.
Yeah, that's fine. A lot of good content. So, and it looked like YouTube was having some issues with the live feed today. So the recording will be up on Timing Research right away as soon as the show ends, and the audio-only recording will be on all the podcast sites as quickly as possible as well. So just want to remind everyone to join us tomorrow for Analyze Your Trade at 4:30 p.m. Eastern Time. That'll be the 44th episode of that. And just want to thank all my guests again for this week. John Hoagland of TopStepTrader.com. Thanks for being on for the first time today.
And thank you both for having me. It was a lot of fun.
Yeah, it was great having you. And Anka Metcalf of TradeOutLoud.com. Neil Batho of TraderReview.net. Simon Klein of TradeSmartForex.com. And Rob Hanna of InvestaQuant.com and Quantifiable Edges. Thanks, everyone.
Thanks, David. Thanks, everybody.